From the trading desk of Daily Forex, this is Christopher Lewis looking at the upcoming Monday, June 29th trading session. This is kind of a strange one. This is Singapore dollar, Swiss franc, and I'll give you a little backstory on this and why I'm paying attention to this. It's not that I necessarily care about the Singapore dollar, and I don't necessarily care about the Swiss franc right now, but it does tell you a lot if you know what to look for. When you look at this pair, you have to think of it as two safety currencies. We have on one side, we have the CHF, the Swiss franc, and on the other, we have the Singapore dollar. Now, they both feature a lot of the same thing. They are both banking centers in their respective parts of the world. In this case, of course, even though, yes, I know Switzerland's not part of the EU, a lot of banking goes there from the EU, from Europe in general. Meanwhile, the Singaporean banking sector is rather strong and rather well known in Asia. So really, what you're looking at is banks, safety of funds, that kind of thing. Singapore has typically been the Switzerland of the Far East. So at this point in time, you have to look at this as which safety currency, which banking currency, which gold-backed currency, although that's not really the case. That's kind of the thought process, though. Are we paying attention to? Where does risk off want to go? Or better yet, where are people hiding their money? You'll get that times of tenacity like we've had where we're just back and forth, back and forth. So, having said that, you can see that clearly the Singapore dollar is dropping against the Swiss franc. So what does that mean? That means that money is either more comfortable in the European Union than it once was, or people were concerned about Asia. Now, Asia is struggling a bit right now, but it's not in any danger of imploding. So I think what this means is that Europe itself is going to be a little bit more attractive. Perhaps it was undervalued. So as we see this market drop, I think also the Swiss franc has had a bit of a raw deal from time to time due to the fact of its reliance on the European Union, and now that things seem to be stabilizing. Yes, I know the debt talks are still going on, but let's be realistic. The Greeks are not leaving the EU, and the EU is not kicking them out. So, having said that, they'll figure something out to kick the can down the road yet again. That's just been the pattern. It's rinse, wash, repeat. Or wash, rinse, repeat. Now, as you look at this chart, you can see from a technical standpoint, we broke down below the bottom of shooting star in a consolidation area. So that's a nice sell signal. I think we head back to the 0.68 level and perhaps even lower than that given enough time, because you see we are grinding lower. This is a grinder of a trade. This is not going to give you 300 pips in a day. It's summertime though, and you have to keep in mind that trades don't move as quickly during the summertime typically. So I like selling this pair on short-term rallies on a break below the bottom of the range, and I think we do hit 0.68. We probably bounce again, but I think ultimately we break down below there and we continue much lower.